Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's the 22nd of December, and together with my co-host Jeffery Halley, we have Kian, CEO of Astral Asset Management, coming to us out of Singapore. Now, Kian, great to have you on the show.
Always great to join the show. Good afternoon.
Now, Jeff, over to regional stock markets with your market roundup.
Okay, so following the price action in the US overnight, Asian markets are mostly in the green, starting with Kuala Lumpur, though it is down just 0.16%. Moving across to Shanghai, and there has been some news out of China today regarding gaming restrictions, etc. But Shanghai is still slightly higher on the day, up 0.08%. Down in Australia, the All Ordinaries is up 0.1%. In Japan, the Nikkei 225 is up 0.09%. Hong Kong is down 0.96%, perhaps after those announcements regarding gaming from China. And in South Korea, the Kospi is up 0.34%. So, Kian, the day before yesterday, we had a Grinch that stole Christmas sell-off in stock markets. And overnight, we've had what they're calling a Santa rally, where we had quite a good bounce back in US markets. What's your take on the price action that we're seeing in Asia today?
I think the Asian markets, most of them have followed, the US markets overnight. And I think for the last 2 weeks, the US markets in the developed worlds have been buoyed by the good news that Fed is finally taking a pause on rate hikes, and the markets have been very optimistic about pricing in rate cuts for the coming year. And as a result, we could see a lot of these counters, especially stocks in the tech sectors, rallying for this Christmas.
Now, Kian, you've just come back from China, and Jeff has just mentioned we've had some more regulatory snap on the hands by the regulators on tech stocks. What's the mood there right now?
Right now, I would say the traffic in the airports have recovered to almost 70-80%. International travel has sort of resumed, with a lot of countries now able to enter China without a visa. I think that's all good. If you look at the scenes on the streets, people are coming out, people are still consuming. But I would say that overall, because Chinese markets have been driven by real estate, the current real estate problems has caused a chill down the spine on the entire sectors. And consumers are unlikely to buy any kind of new real properties unless the whole development is completed, for fear of cases of Evergrande or Country Garden.
That's interesting. So essentially, there's a lot more caution in the market than, especially on the property side, because before, basically, all these developers made money from doing off-plan developments.
That's correct. And property, unfortunately, is a key sector economic driver for China. It constitutes about 25 to 30% of the whole economy. Mm-hmm. So when this whole series of sectors slows down, consumptions in terms of buying of new properties or transaction comes to a halt. People are more cautious about what they spend. People are spending money, but not on luxury goods, but people are spending money more on experiential kind of consumption. They will do domestic travel, they go camping, they go outdoors, but things that they're not spending money buying, the most updated tech gadgets, etc.
And again, saying that some of the news out of China today, we saw the government announce they intend to put restrictions on gaming and monetizing gaming. So Tencent, amongst others, has been hit quite hard today, and I guess that's why Hong Kong is down. But also, we saw them announce that they're going to restrict the export of rare earth element refining technology overseas as well. They clearly want to keep that monopoly in-house. We've not heard much about regulatory risk in China in recent times, but I guess this shows once again that it may have taken a vacation, but it's not gone away.
Governments and regulatory measures in China will always be a key thing to watch for a lot of sectors. As you can see, the regulatory measures on Tencent, NetEase, a lot of people assume they are gone, but by controlling the number of games they can release, it's going to badly impact their revenues, as we have seen. Similarly, measures like control of rare earth, as a countermeasure to US raising tariffs on China-made electric vehicles, etc., will continue as a tick for tack. So the way I look at it is, if you would like to be involved in the investments into China, you need to be very diversified, right? If you put all your eggs in one basket in one of this sector, in the past we have seen it for online educations as well as tutorial sessions. You're going to be totally wiped out if there's a very detrimental announcements on policies control.
Right.
Now, final question. Where do you see the key risk globally currently in markets right now? We've had the center rally. We've had perhaps profit taking by fund managers 2 days ago. For the rest of the trading year, where are the risks potentially, Kian Soon?
I think that for the rest of the trading year, as most of the fund managers take off for vacations, you're going to see very thin volumes in the global markets. Literally, even though the markets are on for the developed markets, many managers have closed shop by today, right? By end of trading day today. And you're going to see tiny volumes, and that could, create opportunities. If you're thinking of, picking up stocks for the long run, end of the year when the volume is low could be a good time. But at the same time, if there are, detrimental news coming out, it could swing prices, and creates more volatility for the share market. But, this is normal. It's end of the year. Typically, this would happen.
Now, on that note, Kian Soon, thank you very much for speaking to us. Thanks for your insights.
Many thanks.
Now, we've been speaking to Lee Kian Soon, CEO of Astral Asset Management out of Singapore. And this has been BizTech's Asian Midday Market Watch. I'm Brian Fernandez.
And I'm Jeffery Halley.
And check out this show on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.